Thinking about launching a podcast but overwhelmed by all the moving parts? At TurnKey Podcast Productions, we take the hassle out of podcasting so you can focus on the talk, not the tech. From concept to launch, guest booking to post-production, we handle everything. Need a strategy to grow your show and turn guests into clients? Yep, we do that too. DIY or done for you, we've got the solution that fits. Whether you're just getting started or ready to scale, TurnKey is your behind-the-scenes podcast team. TurnKey Podcast Productions. Your voice, your message, fully produced. Learn more at turnkeypodcast.com/contact. That's turnkeypodcast.com/contact.
I'm moving to Montana soon. Gonna be a dental floss tycoon. Or maybe I'll just listen to today's Nice Guys on Business.
You have 1.2 million people in the United States that are licensed to prepare taxes with the Internal Revenue Service. You know, your CPAs, your EAs, your, Liberty Tax or whatever. Of those 1.2 million, only about 1,200 of us are certified tax planners. Mm-hmm. We've actually spent the additional time and trouble to understand more and more the tax code so we can legitimately direct our clients down to more verified tax savings, right? So, and that's one of the problems. Your box fillers, you know what they call tax planning?
Right.
Make sure you get your money in on time.
Right.
That's their tax planning. Not how can I save me money on taxes? They're going to tell you how much to pay and when to pay it.
In a court ruling U.S. versus Fishbein, a man subjected to potential incineration while wearing another man's suit is entitled to $10,000 worth of airline tickets. It's an obscure ruling, but a very important one to the nice guys on business. Go from where you are now to where you could be. Get expert tips to grow your business, to be more productive and more efficient, whether you're trying to build influence, grow your community, or make it rain. Best-selling author of Nice Guys Finish First, Doug Sandler, can lead the way. The Nice Guys on Business is produced by TurnKey Podcast Productions. Now, here's your host, Doug Sandler.
All right, welcome back to the podcast. Nice Guy community. Today's guest, Peter Holtz. He knows that most business owners didn't start their companies because they love spreadsheets or tax codes or cash flow forecasting, but that's exactly where Peter thrives. As the CPA, as a CPA, a CEO, a strategist, and a growth-minded operator, Peter has helped businesses navigate turnarounds, launch national sales initiatives, and generate millions in revenue through smart financial and operational strategy. Now, at the firm, he combines practical business coaching, marketing insight, tax planning, and performance measurement to help entrepreneurs build profitable businesses that actually support long-term wealth and freedom. Now, if you've ever wondered how it takes to make your business work instead of you working for your business, you want your business to work for you. Peter's about to bring some clarity. So tune in today. We are going to show you a handful of mistakes that you could be making that is costing your company over $50,000 a year. Those were the exciting things for me to see. And I'm so excited to dive in with you, Peter. Welcome to the Nice Guys on Business podcast.
Thank you very much. It's a pleasure to be here.
So you have a very holistic, well-rounded approach to running a business. Is that because you're an entrepreneur at heart, or is that because you just seen so many people go down the rabbit hole of paying too much money to the government? Lord have mercy. Let's stop doing that. So what's your rationale behind all this?
You absolutely hit the nail on the head, Doug. It's a very holistic approach to what we do when we try to help business owners. And it's really the only way it makes sense. So many people that are in my business, the CPA business, are just, hey, yeah, I'm just going to do your taxes. I'm just going to do your bookkeeping. I'm not going to do this. I'm not going to talk to you about tax planning. I'm not going to talk about your estate. I'm not going to talk about your business performance. We're just doing one thing.
Right.
And then it sends the business owner, who's a business entrepreneur, trying to run a hell of a business, right? Just to talk to 4 or 5 or 6 different people about how to get and put different ideas together. It's a terrible waste of time.
Yeah.
And it is a terrible waste of effort because who do you know who to talk to? You don't know to trust anymore. You know what I mean? It's like, and you have, I see this all the time where people get different opinions from different people. And they're like, well, my guy said this and my guy said that. And my gal said this. And it's like, holy cow. But it's really, really critical to look at the business as a holistic business to understand rules of thumb how the business should operate, to understand what your P&L means, what your balance sheet means, what your key driving statistics should be in your business in order to make money. And then once you make money, you got to keep it away from the government, because you don't want to pay the government any more than you absolutely have to. And the fact is, the tax code, a lot of the tax code is written to help businesses grow and expand, right? It's why we can depreciate assets. That a perfect example, you can depreciate an appreciating entity or a depreciating property. You get to depreciate real estate.
Right.
Which appreciates every year. The only reason the government lets you do that is so that there are buildings built for people to live in and people to work in, because a population that has a place to live and had a place to work is a happier population.
So somebody might say, jack of all trades, master of none. And I don't believe that this is the case in this particular scenario, but you lead with the tax prep or the accounting side, but you backdoor it with, well, but I also want to help you with business, and you might not, the words might not be these words, so help me with this. You help with business consulting, you help with financial planning, you help with all the stuff. Should somebody not have those people in their lives, or should they still have those people in their life, just knowing that you are going to guide them in the right direction when they come to work, come to your client list?
Yeah, the answer is they can still have financial advisors in their life to make sure they get the right, because we don't do the financial advising, the investing side of things, right? So you always need investment people that have expertise in different areas, right? And it could be a real estate investment guy, or it could be a stock investment guy, or somebody that sets rate the plans. But you wanna have somebody that really understands the tax law and how that works and what the impact of all those different things are. And really, it is that holistic approach that's so important, to look at all the different things we do. And quite honestly, there is a model for what we're doing, okay? And the model is the chief financial officer, right? What we're trying to do is to bring a chief financial officer to every business owner.
Right.
Every single publicly traded company in America, right, has a CFO, and they're required to have a CFO to report to the investors, to make sure that people have budgets, they make sure they understand their numbers, make sure they understand the financial side of things. And that's really the model. And yeah, it's not really, I wouldn't call it a jack of all trades. It's really following the CFO model and bringing that to the business owner. It's having that one person, they can, does it make sense for me to buy this new location? Does this lease look like it's a good opportunity for me? Or, should I buy this truck this year? Or, and it's like asking some, like, for example, I got some people in the food truck business, for example. Mm-hmm. Should I buy a new food truck this year? Because I can save money on taxes. Well, yeah, it could help you save money on taxes, because the big, beautiful bill is 100% bonus depreciation. We can do a complete write-off, but you can be able to use that food truck somewhere else. How are you going to expand your business to create more revenue to make that payment happen? You know what I mean? So having somebody to have that conversation is as important as, how do I cut my tax bill?
It's a great conversation to have. It's almost like solving the financial puzzle of your organization or your company when that is not your expertise. Like for me, I'm in podcast production. I love podcast production. I love talking to my clients about how to boost their community, how to build influence, how to put together social media posts. But I don't like to have to think about it. If you catch me, I mean, right on my email alone, it says, things that Doug loves, building relationships and solving problems.
Yeah.
What things he does not love spreadsheets. It's like, you're probably a spreadsheet guy. You probably love them because the numbers don't lie. You need the numbers you need the spreadsheets in order to determine if the numbers are working for you. At what point did you realize that it's more than just counting numbers and helping somebody, interpret their revenue, top line and bottom line into understandable information? When did you realize that wasn't all that you could do?
I would say, and I started with Deloitte, one of the biggest CPA firms in the world. was an area of expertise. I was in banking and different expertise in that area. Went to work for 3 or 4 other companies with revenues from $10 to $44 million in sales, and was managing those companies like a CFO and CEO of those businesses.
Mm-hmm.
And I guess I went through that whole time of like, man, who do I talk to about this stuff, right? And, we're all smart people. We can make decisions. And if you're a business owner, you're a smart guy or gal, you can make a decision. It looks like it makes sense. But 2 heads are always better than one. You know what I mean? And I was in positions where, either I was the CFO or I didn't have a CFO. And I'm like, God, wouldn't it be great to have, somebody else? So and that's where I eventually transitioned out of my last year role. And I said, you know what, I got to form a firm that does exactly this. And that was 22 years ago, where I basically said, hey, you know what? It's time. Business owners don't have this help. And I kind of proved it to myself. One of my early people I greeted with and talked to about becoming a client was somebody that built pools, right? And he built pools for rich people in one of the richest communities in Northern California. And this guy was in his early to mid 60s, and his body was pretty much broken because he worked like manual labor building these pools, and these were beautiful pools, and he was broke. After a career of 20 or 30 years of building these pools for rich people, and building these works of art, he ended up not making any money out of the whole damn thing.
Mm-hmm.
And he came to me with his numbers of, I need to do my taxes. Okay, show me your numbers, your general ledger, whatever. And he dumped out a box of receipts on the front on my table. And it was just like, it's just like at that very moment when I saw that, I figured out why he was broke, because he never tracked his costs.
Well, most guys or people that own businesses, most people are good at the gift that they were given, which is that business. They're not good at the gift of he brought you a box of receipts because that was probably what his parents told him to do, is just save all your receipts, give them to your accountant at the end of the year. They'll figure out if you owe money or you get money back.
Exactly. And you know what? And it's true for every, the butcher, the baker, the candlestick maker, the automobile guy, the restaurant guy. It's true for all of them, is that everybody knows their one expertise, but a lot of times they don't have people guiding them in terms of how to save a little bit of money or how to, structure their situation so they don't have to pay the max tax, right?
Well, let's talk about this for a second, because I'm really curious. When I saw the lead in for some of the teaser on your website, I'm like, okay, I know that there are a lot of organizations, probably including mine, that are making some of these mistakes. Can you share just a couple of them that are common mistakes that people are making, even if they're sole proprietor versus a corporate standing? Maybe that's one of the mistakes right there is don't be a sole proprietor. But what are some of the common mistakes that people are making?
Really, I'll tell you. Number one is accuracy. They don't get their numbers right. They don't write off everything they should. Number two is structure, which is like they're a sole prop and they should be an S corp. They're an S corp. They should be a C corp. They should be an LLC. Getting the right structure is really important. And then, taking advantage. Number three is taking advantage of all the different loopholes you can take advantage of. Yeah. The Augusta rule, which is the ability to charge your business rent for your house and it's as non-taxable income. Paying your kids above age 7 to work in your business. Some people, their kids work in their business anyway, and they never pay them. And it's a way to get additional tax-free income. Medical expense reimbursement programs, writing off your cars, writing off, so many different expenses that people don't think about, or they're not able to write off. Because a lot of times people go, and one of the 4 or 5 people they go to is what I would call as a box filler, right? They'll go to a tax preparation guy, or maybe somebody that's worked for H&R Block and been trained for 6 weeks to put the numbers in the right boxes and fill out the software or whatever to get the tax returns done. And the tax preparer will say, no, you can't write that up. No, you can't do this. No, you can't do it. And they don't use the word how. Yes, you can write it off, but this is how you do it.
Yeah.
Instead of, they'll say, no, you can't write it off, right? And I've run into this over my last 22 years with running onto people and saying, nope, can't do that. Sorry, it's a red flag. Nope, you can't do that. And it's like, typically, if you make about $150,000 a year in your business, you have the opportunity to write close to $100,000 off of expenses you would normally consider personal expenses. I've seen people that use their cell phone every day in business, right? Answering emails, running their social media, doing text messages and making phone calls. And I've seen tax box fillers basically said, no, you can't write off your cell phone. You can only take a part of your cell phone.
Right.
But it's like they don't even, or you can't write off anything in your house. You can't write off your internet connection. You can't write off your home office. I mean, I've seen guys in the construction business with complete barns behind their house full of construction materials and a shop. And they'll say, you know, my other tax person never told me to write off my shop and my house. Like, oh my God, it's where he does his work.
Some of the simpler things that they're not even considering.
There's like, and the key is, Doug, is that people need to understand, the people that you work with, to understand the financial side of your life as a business owner, need to understand your business, right? They need to know that if you're in the restaurant business, your variable cost should be around 50%. Your food and labor should be around 50%, right? And then you drive the volume to take care of your overhead to really make some money. And then, like, if you're like, that's a great one too in the restaurant business. If you're planning to open another location, how much volume can you get out of that, right? And how much is the lease going to be? And what can you, doing some basic back of the envelope calculations from a financial professional really, really helps. And I mean, I love business. I love business owners. When you go to the automobile guy to fix your car, and like they open the hood and they listen to something and they're like, you got a bad lifter or whatever it is, and they just hear it like that. You know what I mean?
Right. Well,
that's what happens to me with numbers.
I see that. You just look at the numbers, or you could look at a previous return and just say, well, why is this a company that's doing, $200,000 in business and you have literally $1,000 in marketing expenses? There's got to be more marketing that you're doing, even if you don't call it marketing. Let's figure out what is marketing so that we can make sure we write it off.
And that's part of the accuracy. People forget they may have a credit card they use for business. But one time they put a credit card down for maybe another marketing expense that is their personal credit card, and they never write it off on their business.
Yeah.
And they can't figure out what happened, why they're paying so much in tax.
So talk to me about what a relationship with you looks like, so that my community that's listening, that are business owners or side hustlers or whatever, whether they're sole proprietor or S Corp or C or LLC, what they can expect when they engage the services of your firm.
What we do is we get your last 2 years' tax returns, right? And we do an analysis of those tax returns to look at, what we see on there and what we would expect to see on there. And we generally find quite a bit of savings, and usually it's around 40%, actually.
Wow.
So, and we do that analysis, and we'll sit down with you and talk to you about it. And then we set up a plan where we meet once a quarter to talk about your business, to talk about your numbers and what your plans are for the future. Because it's not about, a lot of people think taxes, like you mentioned, you talk to your accountant at the end of the year after everything's over, right?
Right.
But with us, we do it proactively, right? So we're talking about, you can do it this way, you can do it that way, you can take this or whatever, however expense you want to take, but you got to do it proactively instead of reactively. So we set it up on a quarterly basis. You have a very reasonable monthly fee, and we take care of if you want us to do your bookkeeping, accounting, we can do that for you as well. And, we really spend a lot of time to put together a system that helps people understand. And we call it kind of the business wealth cycle, which is understanding your numbers, understanding what they mean, minimize your taxes, reinvesting in your business when it makes sense. And then once you create that business to make more and more money, you start to invest in other things, right? You put some money aside for your retirement. You put some money, out for your future and different things like that you really want to do,
I can recall one of the reasons that I had changed firms. This is going back about 10 years ago to a more recent firm, was because of exactly what you're saying, that I would get to December or January, and we would start to have our planning call for our tax preparation time. And there was always the surprise. Oh, you're going to owe $7,000 this year. You're going to owe $20,000 this year. To me, why not just prepare the entire year long rather than just prepare, 60 days before and then having to write a big check and figuring out where that money is coming from. That was always my challenge. It sounds like you kind of head off a lot of those. You don't like. It sounds like you're a guy that probably doesn't like surprises.
No, I don't. And honestly, a lot of people in that box filler mode that I'm talking about, and really, you have 1.2 million people in the United States that are licensed to prepare taxes with the Internal Revenue Service. Your CPAs, your EAs, your Liberty Tax or whatever. Of those 1.2 million, only about 1,200 of us are certified tax planners.
Mm-hmm.
We've actually spent the additional time and trouble to understand more and more of the tax code, so we can legitimately direct our clients down to more verified tax savings, right? So, and that's one of the problems. Your box fillers, you know what they call tax planning?
Right.
Make sure you get your money in on time.
Right.
That's their tax planning. Not how can I save me money on taxes? They're going to tell you how much to pay and when to pay it. That's not a service.
What's the process typically look like when someone is actually at a meeting with you? Is it a Zoom meeting? Are they coming into your office? Are you licensed in all of the states? Does it matter if you're licensed? I don't know how that stuff works. So what's that look like?
Licensed in all states for the federal government, but it is a Zoom meeting. You cannot. This day and age, it takes time is very precious.
Right.
You just can't go driving everywhere. You know what I mean? But we handle people. Our offices are 3 offices in California, 1 in Boston, and 1 in the Philippines, because we have a lot of our own team in the Philippines that also does a lot of work. It's just something that we do over Zoom. It's just so much easier.
Yeah. Oh, it's great. I mean, when we are meeting with, whether it's my financial advisor or my accountant or my attorney, I don't want to have to go anywhere.
Yeah.
I'm assuming that everybody out there, there's people that probably want to meet and do all the old school stuff, but
you do have some people, you do have some people that do still want to meet you and do the old handshake and stuff like that and do look you in the eye. But most people want to stay in their fuzzy slippers, man.
Right.
You know what I mean?
Right. And as it relates to probability of one of the areas, it sounds like you're pretty aggressive in that gray area, meaning you want to take advantage of it. And I don't blame you. I think everybody wants to. Is there a higher probability of an audit, a lesser probability of an audit when it comes to that? Isn't that what we're all hedging against is that, hey, look, I want to take advantage, but I don't want to be audited.
Yeah, I think people tend to worry about that a lot. I don't think it is a valid fear, because everybody's afraid of the IRS. Oh my God, the IRS is going to take all my money and put me in jail. People shouldn't be afraid of the IRS, because the IRS is forced by the Constitution of the United States to follow due process, just like the rest of us, right? They're all abided by the law. And anytime the IRS comes to audit you, you can appeal everything. You can go to tax court. You can do everything you need to do. And quite honestly, what we have an audit protection program with all of our tax returns. So we basically have a audit protection where we'll defend you from the Internal Revenue Service for up to $1 million worth of costs, all the way up through tax court. Okay. Wow. So we have tax attorneys on retainer as a result of this. And, it's basically for us, it's making sure that you have the insurance policy that you don't have to worry about it. But honestly, an audit is what I would call an invitation to negotiation, because because it is, your frontline auditors in the IRS will tell you everything's black and white, but it's the law. And the law generally is rarely black and white, especially financial laws,
right?
Where it's like, is this or is it really that? Or, it is more gray than in any other area, because I'll give you an easy example. Maybe you go to, you take some clients, out to dinner, and you're talking about referrals, right? And, some people would say, oh, you can't do that. You can't take that. Well, you can take 50% of that. But let's say you go to that client that's in another city and you're staying overnight. Well, that's not an entertainment expense. You go to a client, let's say I go to Los Angeles, I'm in Northern California, I go to LA and meet with clients in LA, my whole trip is travel expense. So I can take it as travel,
Right.
and it's not 50% meals and entertainment.
Understood.
Right? So
Understood.
it's kind of like, the tax code is so minuscule and in terms of their definitions that it creates all this gray area. You know what I mean? And
well, because we have such a short time to be able to have this conversation, I know that we're going to get some positive feedback from our Nice Guy community. What is something that I should be asking you, Peter, that I'm not asking you as it relates to either your services or the tax laws or your deliverables, any of that? What should I be asking you?
I think the key is, I think we've already talked about a lot, but one of the keys is that, we save people money on taxes because we do things we believe is the right way. And we do things that we stand up for, and we take care of our clients like we should. We're also offering some, free exclusive tax strategy kits. So if you go to go.peterholtzcpa.com/niceguys, you'll have an exclusive offer for us, which the first component is for a self-assessment PDF that we have for you. And the second component is we'll actually meet with you to talk about your tax strategy. Okay. So, I don't think a lot of people do this really, where they say, hey, we'll meet with you and talk with you, and we'll talk to you about a few ideas on tax strategy. And if you like it, you can send us your tax returns for the last couple of years, and we can allow the opportunity for us to go and look at those and actually prepare a detailed tax plan for you.
That is awesome. What a great gift for the community. Nice Guy community. I'll make sure I put a link in the show notes for that. Peter, don't go anywhere right after we disconnect from the recording, because I want to make sure I get that link for the Nice Guy spot. I did not realize we had our own little link. That's awesome. So
pretty cool, huh?
Let's see if we can move the needle for Peter.
You're nice guys, Doug. So we want to take care of you.
I appreciate that, Peter. Thank you for sharing your message and your inspiration and what you're all about, and thanks for sharing your business model and those strategies with us today.
All right.
Nice Guy community, never underestimate the power of nice or the power of a good, well-prepared tax return. Special thanks to our guest, Peter Holtz. All of his information will be right there in the show notes. Steve O'Brien, go ahead and take us out of here.
For the Nice Guys on Business, I'm Steve O'Brien. Fill up your week with the Nice Guys. Trust me, this is going to hurt me a lot less than it's going to hurt you.